Welcome back, everybody. Thank you so much for clicking on today's video. Today, we're going to be talking about NIO stock. Before I start the video, guys, please make sure to leave a like on the video below. Subscribe to the channel for more awesome content. Join the family, guys. Let's go on our investor journey together. So today, we're going to be talking about NIO. As you guys see, the last trading session, NIO did not do well at all, down about 9%. And a lot of people are wondering, why did NIO stock crash all of a sudden? It was doing very well, hit an all-time high earlier in the trading session, $53 and about 86 cents, which is pretty good. A lot of people thought it was going to $60. But before we get into that, guys, analyzing the 5-year chart, IPO at $6 September 12th of 2018, up 627%. Looking at the 1-year chart, it is up 2,247%. I've said this time and time again. NIO is probably the biggest growth stock of 2020. Been getting a lot of attention ever since the whole EV market started blowing up. Looking at the 3-month chart, it's up 234%, and even the 1-month chart's up 82%. So why did NIO stock all of a sudden crash? And the reason is because Citron Research published a short seller report about NIO stock, basically saying that the value of NIO right now cannot be justified. So what does that mean? So basically, Citron Research, they made a bullish call about NIO, I believe earlier in the year, saying that NIO stock is a buy. But they didn't change their prospect, basically saying that NIO stock cannot be evaluated at what it's currently sitting at, bigger than General Motors right now, guys. And Citron basically said that, hey, NIO is going to $25. And there's a multitude of reasons on why they believe that way. One, they said that NIO's basically overvalued due to the simple fact that Tesla sold double the amount of vehicles that NIO did in China. So I mean, yeah, you have to understand, guys, that, Tesla is a bigger company than NIO. So obviously, by default, they're going to sell more cars. And on top of all that, they basically said that people should just cash out their profits, rotate out, and there's better ways to invest in the EV sector. You guys always have to understand, guys, it's a short seller. So you guys have to always take what they say with a grain of salt. Now, I'm not saying Citron Research is right or wrong. I think they're wrong, but I'm not saying they're wrong. But their main point is to drive down the price of the stock. That's how they make money on the stock, guys. But they're basically seeing a 50% downside from NIO stock. So where does this leave NIO, guys? Should you still invest in NIO? Should you buy NIO at $43.66? And I'm going to say yes, I still think people should buy NIO stock. And here's the reason why. Not only is NIO growing like crazy, it's got a lot of big-time investors behind its name, a lot of support, but it's not like NIO's evaluation is underjustified, guys. You have to take a look at NIO as a company as a whole, consistently beating their delivery estimates, and they have earnings on the 17th, which I know a lot of people are waiting for, and we're going to see how they do on their earnings, but being able to consistently beat their delivery estimates, not by margins, guys. I'm talking about 100 to 200%. That's over double of what people expected, and it's absolutely crazy, but Citron Research believes that NIO stock is not going anywhere. They just think that it's going to be headed down south. For me, like I said, I still think that NIO is a good buy. Citron Research doesn't like NIO's share structure, and they think that, there's a lot more money to be made in the China EV sector other than just NIO in itself. And yes, there are other companies out there in the EV market that are based out of China. There's Tesla, who just expanded to China. There's XPeng, there's Li Auto, and there's all kinds of, other EV companies. But for me, I still think NIO is a buy. I do see the long-term prospect in NIO. I still think NIO has a long way to go. I still think they have a long path of growth, and I don't think NIO's done growing yet, guys. And like I said, I'm not undervaluing what Citron Research said. They proved their statistical standpoints on NIO stock and why they think NIO stock is going to $25. But for me, I still think NIO's going to be blowing up like crazy. Like I said, consistently getting analyst upgrades from big time investors like JP Morgan, Deutsche Bank. There's a lot of people who have a lot of money sunk into NIO, and they haven't sold yet because they see the long-term prospect, guys. Like I said, NIO just started growing, right? NIO, is a pinnacle of growth, the biggest growth stock of 2020. And they still have a lot of stuff still going on for them, guys. You have to understand that not only are they releasing bigger and better batteries, they're currently valued bigger than General Motors, which is absolutely insane, but they also have their earnings coming up on the 17th, which is going to give us a better prospect of where NIO as a company is going to be headed, where NIO and how NIO actually is doing. And on those earning calls, they basically let you know, like, okay, this is what we're expecting, and this is what's going to be happening over the next couple of months. Don't forget, guys, they also have NIO Day coming up, which is going to be a huge day for NIO. They're going to basically be unveiling all sorts of products, and they're going to be unveiling basically what's to come for NIO in the near-term future. My evaluation of NIO still stays the same. I still see NIO being a $100 stock in 2021, and I can understand the rising competition because I know that Tesla did cut a lot of their prices on their vehicles, making the competition for NIO a little bit harder. Tesla being a well more established brand than NIO. But you guys have to understand that Tesla's been in the game a lot longer than NIO has. NIO was founded in 2016 while Tesla was founded in 2003. So Tesla's been able to gain the traction in the name, and Tesla well deserves it. Elon Musk took that company from the bottom up. And I still do expect great things from NIO, guys. You have to understand that there's going to be more than just room for one EV company in the market. NIO's going to be a top EV company. Even analysts saying, NIO's going to be an iconic brand, a top EV company in the game. The technology they offer is second to none. The features in the car and the types of cars they're offering are all beautiful. They're updated, and a lot of customers seem to love them. Hence why their delivery estimates are always basically being beat through the roof, guys. You have to understand as well that, Citron is a short seller. Their main point is to take down the stock. And although they made a bullish call earlier in the year about NIO stock, they probably want to hold a short position. And I'm not saying, only time is going to tell where NIO is going to be headed from here. But that did cause NIO to sink. And it scared investors a lot because they're, Citron basically saying that, NIO is going to be losing over 50% of its current value is absolutely insane and mind-boggling to think about. To think that, a company that's doing so well, expanding like crazy in a market, that's very new. It just gained popularity very recently. There's still a lot of room in the EV market to grow. I see the EV market still has a lot of room to grow over the next 5 to 10 years. So I don't think NIO is going to be counted out just yet. And I still think NIO is going to be making a very good name for itself. And it already has, guys. NIO has proven itself time and time again. We'll see what their earnings look like, which I do think that NIO is actually going to be doing very well on their earnings. But the fact that they're earning analyst upgrades, the fact that you have a lot of analysts talking great things about NIO, the fact that they're consistently, raising the bar, expanding and growing, and the fact that they're keeping the brand name clean goes to show that NIO as a company is a wholesome company. It's not proclaiming, it's not over-exaggerating its vehicles. It's not, basically overstating its technical prowess or anything like that. NIO is a clean brand. It will stay a clean brand. I know a lot of people are bullish about NIO. I am super bullish about NIO. And for me, I'm just going to shake off this short seller report like it never even happened. And I know a lot of investors are going to do the same because you guys have to think from a day-to-day perspective. There's so many companies out there that, people target as far as short sellers, and like I said, guys, Tesla is the biggest example. Look how many bears attacked Tesla, saying it was going to fail, saying it wasn't going to make it. Now look at it today. It was a $2,300 stock before the stock split, and people till this day still don't know how that happened. Is because a lot of people who believed in Tesla wrote it out and they got rewarded for it. And I'm going to be doing the same with NIO. I'm not going to sell any of my position in NIO. I still think NIO still has so much more room to grow to the point where, like I said, I could see NIO being a $100 stock either by the end of the year or early into next year. With that being said, guys, that's all I really have to say about the video. Let me know down in the comment section below, guys, what you think of the Citron research report. Do you think Citron is right about the situation? Do you think their evaluation of NIO is correct, or do you think that they're wrong? If you guys own NIO stock, how many shares do you guys own and what's your average? I'm always very curious to know. With that being said, guys, thank you. Have a great day.